Okay, why don't we go ahead and get started. Again, this is Bob Goodman, Managing Director at CanopyBoulder in Boulder, Colorado. And again, if I can ask everybody, well, number one, welcome to the webinar. I appreciate you signing into this. And if you can mute your microphone, that'd be great so that we don't get keyboard clicks or background noise as we go through the presentation. The plan today is Patrick Ray, the CEO, co-founder, and managing director at CanopyBoulder, is going to give a quick industry overview, and then we'll go into the program and what we're all about and what we're expecting from new applicants for the new class coming up on January 13th. And then we'll open it up, hopefully, for about half an hour of Q&A as we get through the program. So again, what I mentioned, we're going to be doing introductions, industry overview, and then we'll get into more about who we are, what our program is, and what you can expect during the program. As I mentioned, Patrick Ray is the CEO, co-founder, and managing director of CanopyBoulder. He started this back in, I believe, 2014, so he's incredibly experienced, has an amazing network. He is on the line, and I'll ask him to join us in a second. Also, Celia Daly is with CanopyBoulder as our investor relations manager, and also she handles all the marketing activities as well, and she's also on the line. Celia, can you hear me? Hello, Celia.
Yes, I can hear you. Sorry, I was muted. Hi, everybody.
Okay, and so why don't we go ahead and get started. I'll stop my share. Patrick, if you want to bring on your screen, the stage is yours.
Bob, you need to make me the host or allow me to share my screen.
Okay. And how do I do that?
Green.
Here we go. Make you the host. Okay, there we go.
Okay. All right, can anybody see my slides?
I cannot.
How about
there
now?
We go. Yep.
Okay. Hello, everyone. Good morning or good afternoon, depending on where you are. My name's Patrick Ray. I'm the founder of CanopyBoulder. And today I wanted to talk a little bit about the market before we get into what the accelerator is about, how it works. So what I want to do is provide some information. Starting out, I want to talk about and give you guys all a reference for the investments that we've made. Since we launched and made our first investments in early of 2015, we've made over 100 investments into over 100 companies. And the investments have been in two categories: ancillary products and services for the cannabis industry. So that's your data, software, tech, media, etc. Hardware. These are a number of the companies that have come through our program. You may recognize BDS Analytics if you're searching up and researching data on the industry. You may recognize Front Range Biosciences, who just completed a number of rounds. And I think people are sharing their screen, or they have their camera on. You can turn those off. Including Bloom Automation, Pot Guide, which is a media site, Green Screens, which does in-store marketing at dispensaries, and a number of others. In addition, this last year, we began making investments in CBD and hemp companies. And we obviously like finished products and focus on brands domestically. We've made some international investments in the supply chain, which we'll be announcing shortly. So all in all, 105 companies, over 120 individual investments, because we do often follow on. Now, I'm going to talk a little bit about the market. I want to sort of give credit where credit is due. the information that I'm going to be providing here comes primarily from BDS Analytics. That was a company that we co-founded and invested in 2015. They are the leading data provider in the cannabis industry, collecting checkout data from dispensaries. And so let's go into some of the data. So many people ask, is it too soon? Is it too late? Is it just right? The right time to start a business? And our answer is it's just the right time. Cannabis, spending on cannabis in the United States is growing dramatically, projected 25% compound annual growth rate for the industry for the next 4 years, to reach about $30 billion in 2022 from where we are today, which is just about around 12 billion, or 15 in 2019 is what's projected. Now, a lot of the conversation in the industry and the press, driven a lot by the Canadian licensed producers, is international opportunities for legal cannabis. And, you know, we just like to provide some context there and reinforce that launching the US is the right place, the right time, not just now, but far into the future. So per BDS Analytics research and market modeling, the US market will make up the majority of global spending this year, next year, the year after, and many, many years to come. And it's a very disruptive industry. When you survey consumers of cannabis and you ask, have they decreased their consumption in other categories, we see a very dramatic change in consumer behavior because of cannabis in all these categories and more. And it's not a small segment. This is a growing population. Over a third of adults in fully legal states have consumed marijuana, and 15% of all US adults have consumed hemp-derived products, specifically often CBD. So growing, large, and disruptive market, an incredible combination for any entrepreneur worth their mettle to launch into. And it's all changing still. This is a photo of the Farm Bill being passed. We're getting some feedback there, so we need people to mute their mics. This is the Farm Bill getting signed that was passed in 2018, and it has going to even change the industry even faster. So this is a chart which is a quantification of the total cannabinoid market. So that's THC, CBD, and everything in between that may be synthesized, derived, or fractionated into products. So 2018, we're looking at $11 billion market. When we add in those CBD and non-THC cannabinoids, in 2024, we're predicting, or BDS Analytics is predicting, a $45 billion market. To put that in context, that is the size of the entire sneaker market in the United States. Think about how many sneakers you have in your closet. And it's becoming mainstream. CBD is now the gateway for many consumers to join this cannabinoid revolution. The major retailers are getting on board, the major investors are getting on board, and many of the major CPG, pharma, alcohol, tobacco companies are looking at this market actively as well, which bodes well for entrepreneurs who can do well, grow fast, claim a leading position in the sectors or the segments that they're going to launch into, and essentially stand in the way of these companies capitalizing on this opportunity as well, and become great acquisition candidates. Another company that we co-founded was Hemp Business Journal, which sold to New Frontier Data last year. This is their projections for total CBD sales by channel. If you don't think that there's an enormous market opportunity here, I don't know what will convince you. And that is really it in terms of my presentation. I'm going to pass the mic back over to Bob.
Great. Thank you, Patrick. And if you can unshare your screen, Patrick. There we go. Okay. Can everybody see my screen?
You look good, Bob. We can see.
Okay. So thank you, Patrick, for the overview. I just saw an article actually today that said in the UK, CBD has surpassed vitamin C and vitamin D sales, which is amazing. So it just gives you an idea of the growth, the opportunity that we're involved with right now. I'd like to now go into CanopyBoulder background a bit, talk about the program, what the offer is for the next class, the program structure, what we are looking for as far as candidates, what the application process is, and then we'll open it up for Q&A. So we are the leading early stage investor in cannabis. We focus on ancillary companies, so non-plant touching, except for now in our last class, which just graduated this last summer. We've opened up for hemp and CBD as well. We've launched over 100 companies. We've had over 11 accelerators to date. We've made over 120 investments. And the current aggregate portfolio value is over 200 million. We've raised, well, actually the companies have raised over $65 million within the portfolio. And we've had multiple exits as well. For those of you who know ArcView is one of the leading investor membership groups in the country. We are a partner with ArcView, and we work very closely with them as far as talking about the opportunities that we're working on, as well as they pass deals to us that they believe to be appropriate for us to take a look at. They also do events around the country, and we partner with those events. We do presentations. We also have our companies, members of the current accelerator team, also present at the ArcView event. So it's a great way for the teams to get in front of potential investors. We have a very strong mentor base, over 150 mentors right now that have both experience in cannabis and traditional industries. These are people who want to give back basically to the startup community. So we introduce the teams to our mentor base. We make recommendations to them as far as people they should be talking with. And then we let the mentors and the individual startups decide how they want to work best together moving forward. This is the team today. Patrick, you met earlier on the call. Celia, I mentioned, is in charge of investor relations and is the marketing manager for CanopyBoulder. I am managing director. I run the accelerator program and also the mentor program. Patrick talked a bit about our portfolio, but some of the names that you may recognize that have gone through the program and are very, very successful in their activities. Let's talk a bit about the program. It is a 13-week program. We expect the teams to be in Boulder full-time during that time period, again, starting January 13th of 2020 and ending on April 10th of 2020. So during the week, during that time frame, we expect the teams to be here in Boulder and available to go through the weekly curriculum. This is what our facility looks like. It's a great location for not only having the mentors come in and give presentations to the teams, but also Patrick and myself giving presentations as we walk through the rigorous curriculum. Great locations for teams to be able to meet in conference rooms, in sound booths, if they're having calls, in a general breakfast kitchen area as well. But it's a really good location with a totally awesome view of the Flatirons behind us in Boulder, Colorado. But it's worked out quite well for the presentations as well as the team activity. I talked about the mentorship program, but that is an excellent group of people that we can connect to the teams to help them in all aspects in building their due diligence, in putting together their direction, their presentations. These mentors are great, and they have done a great job in helping build up the companies so that at the end of the 13-week program, they're very confident and able to pitch to the investor base that we introduce them to. The program is very structured. It's designed, though, around the individual cohort company needs. We have each week is a specific theme. We start off, because we believe team is very important, we start off with not only
Professional.
Yeah, I'm sorry, if you can mute your phone, your microphones, that'd be great. So we start off with orientation, and then also get into team very early on, so that we can help, if necessary, introduce potential team members to the companies. But we get into branding, we get into pro forma, we get into what is venture capital and what are angel groups, how to deal with them. Many different facets are covered throughout the 13-week program, so that, again, at the end of the program, they have the necessary due diligence in place, and again, the confidence to be able to effectively present their solution to the investor base. During the program, we have specific assignments. We bring on additional resources as needed, teams with those assignments, but things that, again, with the goal to have the teams very well focused on hopefully a very large market opportunity, with all the necessary due diligence that they need to be able to provide to investors as they start raising their seed rounds. Give you an idea, just some of the mentors that we bring in. You can go to our site, CanopyBoulder.com, and see more about the mentors that we have. But we bring in 2 to 3 mentors each week who will give presentations, for example, on, again, pro forma, on branding strategy, on growth hacking, on sales strategies, all the different, again, facets of a successful startup company. The total focus for the program really is to get the companies in front of the appropriate investors so that they can successfully raise their seed round. So that means that we do demo days. We do demo days in Boulder. We do demo days in Denver. We do demo days that are tied to the ArcView events, which are traditionally in Los Angeles. Again, if you can mute your microphones, because I'm getting some feedback from some of the participants. So the ArcView activities, in this case, ArcView is going to be running a Los Angeles event in February, and then they're doing an additional event, I believe, in Vancouver in April, and we'll certainly probably want to have the teams be active with those events, but we will also be doing our own CanopyBoulder demo days, again, in Boulder, Denver, and most likely in the Silicon Valley, San Jose, San Francisco area. Each week, we have one-on-one meetings with each of the teams. This is very useful to be able to understand the needs of the specific companies and how we can help. So we spend, again, every week with each one of the teams, we do a one-on-one session where we run through the different activities, we run through their plans, we run through the concerns that they have, and if necessary, we bring in more mentors, or we provide some suggestions as far as potential directions that they should consider. We're also doing something relatively new in that we are doing early on a deep dive with each one of the teams. That's a 3-hour session. Think of it as a strategy session that we tried successfully in this previous cohort, and we've decided it was so successful that we wanted to do it early on. So we're actually going to be doing these 3-hour deep dives with each one of the teams in the first and second week of the program. We also have many community events. Denver, Boulder area is very active, obviously, in the cannabis sector, but also just in general in technology. So we have several meetups that we participate in that involve cannabis. There are also several technology ones, including blockchain, covering other subjects. And we highly recommend that the teams become aware of those events and be as active as possible. Right across the street, we also have a Galvanize office, and in the Galvanize office, every Wednesday morning here in Boulder, there is a presentation opportunity for the teams in the 1 Million Cups program, which is a national program across the country where startups can get in front of experienced investors, mentors, etc. And so we push our companies to get prepared and active in that 1 Million Cups presentation. Again, right across the street from our CanopyBoulder office. Every week we have pitch practice. we want to focus on the teams so that they are capable of being confident and effective in their elevator pitch, their 2-minute pitch, and their 5 or 7-minute pitch. So we run through every Monday afternoon. Every team presents in front of all of the different teams in the program. We grade each one, and we rate who the king or queen is. We actually have a crown that the teams can win. But it's a very, very strong program in helping build confidence and helping build the message and making the presentations as effective as possible. And I mentioned ArcView, very strong partnership with ArcView. We, again, trade deals back and forth with their investment community as well as with our investment community. We work together on what's going on within the industry, and we participate in all of their events around the country and actually around the world. So what do we look for? You've heard this before, team, team, team. It's very important. And we like to see candidates that come in that have at least 2 co-founders, although we brought in some teams that have 1 and help them build on additional resources. But we really like companies that have 2 co-founders because it's very important as you go through the ups and downs of this experience that you have people to talk to and people to be able to help you through some of these running the gauntlet is what I call it. So we look very heavily at team. We also like to have, if possible, CEOs that have potentially been through startup races before. We view that as being very strong. So we're very focused on team initially. Also, we're very focused on the potential for an exit. Obviously, we're investors. We invest in the companies. We are not a charity. We are a venture capital company. We invest in the teams. We invest in the companies, and the purpose is to get a return on our investment. And that's the same goal that other investors have, and it's the reality of the world that we live in. We also look for large market opportunities, large size opportunities. We enjoy candidates that have some form of traction or perhaps are close to traction. Perhaps they've done their MVP, perhaps they've done a proof of concept, and perhaps they're into some initial revenues. We also like teams that are creating a solution that has good timing for the marketplace. In other words, there may not be a lot of competition and the market is growing very rapidly. Speaking of competition, the competitive landscape is interesting to us. We want to make sure that the team that comes in has a very strong chance of being able to impact the market and to gain market share. So competitive landscape is very important. And attached to that is also the intellectual property or the moat, if you will. We're very interested in understanding what type of protection these candidates that are applying for our program might have to protect them against competition. Also very interested in disruptive technologies, disruptive solutions that are really going to be impactful in the marketplace. So let's talk a bit about process and timing. And again, if you can mute your microphone.
Yes.
Hello. Can you mute your microphone so that we don't get feedback?
Which field trip are we talking about?
Hello. All right, let's continue. So process and timing
The
for this.
paperwork for the Science Center.
Viola, can you mute your microphone? All right, so the program is starting on January 13th. The applications have been open now for a few weeks, and the application deadline is October 25th. And we will be making decisions as to the top 10 teams that we want to bring into the program by mid-November. So the first step is to request an application, and then once we get that, we will send you more information so that you can complete the application. We will review that information, and if it looks like it has interesting potential for us, we will ask for a pitch deck that will come to us, and then we will review those pitch decks and set up some initial interviews. And we're actually in the stage right now where we're setting up some initial interviews with some of the new applicants. We will be reviewing these applications and pitch presentations and also the notes from our interview activity. we really want to get to know the teams that we are considering as candidates. So it's a very strong program where we have several calls, several interviews with the teams so we can better get to know the teams. We'll run through due diligence information on those that are starting to pop up to the top candidate list so that we can better understand the opportunity that's been presented. And then we'll make an offer to the teams that we think fit the requirements of the program. This program, what we're doing this time is we are going to be offering a $20,000 investment that's an equity investment based on the stage of the company. Typically, it's between 6 and 9.5% equity that we would like to get for that $20,000 investment. And then in addition to that, we're doing a $100,000 investment in each team that's part of a convertible note with a conversion cap of $2.5 million. We can get more into those details. If you have any questions, please ask about that. But that's the offer for this next cohort starting January 13th. So with that, we're just about right on time. If you have any questions, please do not hesitate to step up and ask. You can also use the chat if you're interested in asking a question.
Hey, Bob, this is Greg Anderson with Series. Could you discuss the team, like the participants? My initial understanding was an individual showed up, but are you expecting the founders, all of the founders to show up, and how does that look like?
Yeah, we would like the typically the founders that are available. We understand that in some of these cases, the founders may also have other activities that they're involved with, but we would like to get the core players within each one of the teams to be present as often as possible. Certainly one co-founder with perhaps other co-founder or co-founders who are coming in on occasion to participate. Does that answer your question, Greg?
Yes, sir. Thank you.
You bet. And go Army, by the way.
You got it.
Any other questions?
I have a question.
Yes, Lee.
Our founders live in Metro Denver. Are they required to move to Boulder for the accelerator duration?
No. That just we're only asking that obviously if you're from outside of the Boulder, Denver area, and it would be hard for you to commute every day, that you move and be in the Boulder area. But no, certainly if you're a Denver area, you can commute to Boulder.
Thank you.
Yep. There's a question here, do single founders have a zero chance of being accepted? No. We have brought in previous companies that have just a single founder. So no, that does not exclude you from being involved.
Hi, this is
Jared,
Austin
we're
Mitchell.
getting a fair bit of feedback from your mic. If you don't mind muting your mic, Jared, that would be helpful. Jared? Okay.
Yeah, he's got it. Thanks. Yep, there was another question.
Yes, Austin Mitchell. If you have a service-based business where you're already serving clients, are you able to do so during the accelerator if it's part of your business model?
Certainly. I mean, we want the teams to be able to stay active with their revenue generation. So if I understand the question correctly, this is something that's in addition to perhaps what your core focus within the CanopyBoulder Accelerator program is. But we definitely want you to keep working on your revenue generation.
Great, thank you.
I see one question.
Let me add to that. You know, a very important part of what in other investors and frankly, you know, customers like to see is traction and proof of concept. So we want to accelerate the development of your business, not hold it back, right? So if you are already generating revenue, that's a big check for us, right? That's a very positive signal that there is in interest, and you're proving that the market wants and will pay for your service or your product. So we don't want to get in the way of that. We want to provide more fuel for that fire, and that's a part of why we make the investment at the beginning of the program. So if you have service clients, you can bring on a customer service rep or a client success rep or another salesperson that allows you as the founding team or the CEO of the founding team to focus on working on the business, not in the business. Does that make sense?
Yes, it does. Thank you for clarifying.
Okay.
Thanks, Patrick. There's another question. I'm curious how many women have gone through your program. Do you find there's a dearth because women who are a mom are unable to break away for that many weeks? Also, two of our founders are in Alaska and Illinois. Are we expected to fly down or move for that time? So as far as women, we've had several women in the program go through the program, which is great to see. And I think we're going to see that continue to grow as far as the cannabis sector goes. As far as the number of women, I don't know. Celia, do you have that number? But it's been several. This last class that we had about 5 or 4, I believe, women in the program. So some of them are moms. Some of them are also from, for example, Oregon, who have come out here. And I understand the hardship and appreciate that. And we want to work as best we can with that issue as far as moms and kids. But the previous teams have actually figured out how to do that and have been able to be here during the 13-week program. We expect that the founders who need to be actively involved and who will benefit from our program to be able to be here as often as possible. Certainly, at least one of the founders, we'd like to be here full time, but we would recommend that perhaps 2 founders are here as often as possible. And we have team members. We had 3 team members from one of our teams in the summer accelerator came from Argentina. So we get teams from all over the world that do come in here, and they do spend the full 13-week time here in Boulder. Part of that funding that we provide is to help them in finding a place to live and to be able to spend some of that funding on their living costs. Another question, why did Canopy move away from 30K, 90K to a 20K, 100K? We actually moved for the first time. The last cohort was 30K and 100K, which was the highest that we've done to date historically, and we've decided to move to a 20K, 100K, just because of the way the funds work out and how we can best use those funds across the broad number of companies that we want to work with.
So, hey, Patrick here, I can speak to that from the beginning. We started out CanopyBoulder and it was a 20K investment. And then we've increased that over the years and tried different ways of deploying capital with these early stage companies, as many accelerators are experimenting to see which method yields the greatest result in terms of traction, success, and then return on investment. Our offer right now is on par with that is offered at Techstars, which we are good friends with here in Boulder, and they are the leading accelerator in the tech space around the world. So we wanted to increase our offer to be on par with other programs, accelerator programs that have proven out this successful model. So that's why we've moved to the 20 and 100K model. I'm seeing a question that says, how do you define full-time? Full-time is very simple. An entrepreneur who's full-time is working probably 15 hours a day on their business, whether they're thinking about it while they're exercising or planning in the evenings. Entrepreneurship is not a part-time activity, and we're not interested in investing in entrepreneurial teams that are approaching the entrepreneurship as a part-time pursuit. Obviously, we've raised money from other investors and have a fiduciary duty to deploy that capital into the best, most committed teams as possible, right? So, there are really two types of startups. There are lifestyle startups, and then there are startups that qualify to be venture-backed. Lifestyle startups are small businesses. Maybe they're consulting based or purely service based. A lot of agencies, a lot of creative shops. They are very probably often dependent upon individuals and the individual's bandwidth to grow. Whereas a venture-backed and those lifestyle businesses are great. We encourage people to start those. It's just they're not going to see investment from investors because they won't be able to scale eventually and return capital. There's a low probability they will scale and return capital to investors. So we like venture-backed businesses that are based on technology, creating products that can be sold in mass to a large number of customers and to grow into a large business, right? So when we're investing in companies, we're looking for full-time commitment from those entrepreneurs, not part-time. And we're looking for businesses that will grow and scale. Now, it doesn't mean that a lifestyle business is not a great business to launch. It's just one that, you're not gonna see investment from. And I encourage anyone to dig in that's considering joining an accelerator to dig in on that topic a bit more and make sure that they are up to it. And they have the ability and the energy and the time and the sort of fortitude to commit to launching this business full time.
Okay. Aaron, I see you asked, hello, Aaron, I hope you're doing well. I see you asked, other than revenue, what metrics do you use to evaluate traction? Good question. We look also at companies that have a very large base of users. Perhaps they built up a large, couple thousand or tens of thousands of users who are using their service, their solution, their application, but have not yet switched to a revenue generator or a subscription type model. So the companies that have been successful in also building a freemium, if you will, or free service opportunity that has generated a lot of users, that's considered traction to us as well, because the potential is there that then you can move into a premium model where you're actually charging for use at a higher level of services, and that generates revenue.
Follow-up question on that. When you're selling a product, how do you see developing that user base without creating revenue?
Well, if I understand your question correctly, if you're providing your product to build awareness, to build a presence, then numbers of products provided out to a specific geographic area is of interest, even though perhaps you haven't gotten to the stage where you're charging and generating revenues. So again, it's a matter of looking at the potential that's being built within the company. Maybe the revenue stage is not there yet, but you're building a strong base, strong market share of people who are interested in what you're doing and are potentially using some of your services or your products. But you have the potential, obviously, of getting to revenue and hopefully being able to ramp that revenue very quickly.
Gotcha. Thanks.
Yep. I hope I'm not being too wordy here, but see, we have another one. If we have applied in prior years and didn't quite make it past your final steps, is feedback available from last year's application, and what is the process to reapply? So the process to reapply is the same as it was previously. Is we ask you to come in and ask for an application, and that's through our CanopyBoulder.com site. You'll find that. We will then take a look at that and request a full application, and we will take a look at it. And hopefully, if you didn't make it in previous applications for whatever reason, hopefully you've worked through those, and we will take a look at it. We have all the records for previous applications so we can see exactly why certain decisions were made on our part, and certainly bring those up to you as we go through your new application. So bottom line is to reapply if you believe you've grown and worked through perhaps some of the initial stages that for whatever reason didn't bring you into our program. Any other questions?
Hey, Bob, I see a question here. What type of ongoing support is provided for each accelerator graduate, 1 and 2 down the line?
That's a good question.
Yeah, so, an investor-entrepreneur relationship is like a marriage, frankly. I mean, and sometimes they last longer than marriages, upwards of 10 years. And so, the support that we provide is ongoing, right, through the life of the investment. So, for example, right now, this morning I got an email from one of our alumni from our 2016 cohorts asking for a contact at a contract accounting firm to help with their bookkeeping. So we made that connection for them. We have companies right now who are raising capital on crowdfunding sites like Micro Ventures, and per their request, we're putting those links to those fundraising sites out on our social media channels. And this last year, I'll finish up with this. We moved one of our staff into Celia Daly into a community and investor relations role, so that she could leverage the big database of investors that we've developed and profiled over the years to make more efficient and relevant connections for the entrepreneurs to investors. So, for example, we have a company say, hey, we're going to go do a bridge round or a Series A, and we need to connect with these 10 VC firms. We'll make those warm introductions, because that is warm introduction goes a long way. And so we leverage our relationship with the investors to help those entrepreneurs do more faster. Okay,
Great. I see there is a question, is there a way to get investment from Canopy if we are further along than early startup? Is the only way to get capital from Canopy going through the program? Traditionally, that's been the case, although we have made and will continue to make outside investments in companies that we view are of significant potential as far as return on investment. So the question is, yes, you can get investment potentially from CanopyBoulder, even though you may be later stage, and we're always looking for those types of companies. One of the companies that we did invest in who did not go through the accelerator is called Weller, and that's a CBD sparkling soda company, or sparkling water rather company, that we share office space with. So that's an example, and there are several other examples where we are making investments in companies that did not go through the accelerator.
And I'll just add on to that, these are few and far between. The companies have significant traction and are proving out their model works, right? And they are scale. So they are the cream of the crop. We have a lot of deal flow coming from companies in the industry every day. Folks are reaching out and saying, hey, we're raising a round. Do you want to participate? And so we're very, very, very selective on those investments. You know, we're looking for hundreds of thousands of dollars in monthly revenue. We're looking for teams who have successfully launched and exited businesses over and over and over again, or that have some sort of very unique corner on a very specific market that is already proven product market fit.
Okay.
I see a question here.
Guys,
about $100,000 convertible note. Is this accounted for in the initial 6 to 9% equity, or is there more equity required in return for this note? So the $100,000 convertible note is at a $2.5 million valuation cap. So often when you combine the initial 20K for 6 to 9.5% and the 100K, you know, where we'll all probably end up is around 10, 11% of an equity after, depending on where that convertible note converts. Now, the question is that how, how do people, or how should you consider that and think about that investment? So let's put it in context. A VC-backed company, when they raise funds from investors, they will often give up on an average of 20% of the company. So they'll if they're raising $1 million in a Series A or raising $5 million in a Series B, they will often be diluting their previous investors and shareholders by 20%. So our offer is quite fair and is very founder friendly, and most all accelerators are designed to be the most founder friendly investors out there, right? It's capital, help, commitment. It's not just writing a check. And in addition, often the founders are only having to dilute themselves by 10, 11, 12%, not 20% in these initial rounds. When in fact, most companies that raise money in these early stages, they'll give up more than 20% because they have the least amount of traction. They're looking for a significant amount of capital, and they just can't garner a higher valuation. So we try to help our entrepreneurs understand the sort of fundraising roadmap that they will be going on, and make sure they understand that, this is an offer that is, often taking about half of what a normal investor would take.
Okay. There is another question. Will any incubators be accepted by Canopy in 2020? It's a good question. So the accelerator program, which is that 13-week program, will run between January 13th, 2020 and April 10th. We're now looking at actually putting together an incubator program that will bring in certain companies that perhaps do not need the rigorous curriculum that we offer in the accelerator, but would like to get help from me and from Patrick and from Celia on a weekly basis for like staff meetings or investor meetings, but would also perhaps, if they're in the area, would like to use our facility, which will be available to the incubator companies as well. And they will also have access to our mentor network and our investor network. So we are looking at an incubator program that will most likely begin in the April 2020 timeframe and run for 5 months. We'll publish more information about that program soon. So there will be one in 2020. Patrick, do you want to add anything to that?
Yeah, that incubator program, very importantly, will not include investment upfront. It's a sort of a super advisor role where companies who are in later stages but want to tap into the network that we've developed will work with them in an advisory role for a very intense amount of time. And there's no structured program like the accelerator where every week we talk about a different topic and there's assignments and mentors. There won't be any of that. It's primarily an advisor type arrangement.
Okay, great. So I don't see any new questions on the chat side. Anybody have any questions they'd like to ask? You still have a few minutes left.
Hi, Bob. It's Brad Baser. I was curious
Hi, Brad.
if you all will be doing 2 cohorts in 2020.
We will not. We'll be doing 1 accelerator cohort in 2020.
Okay. Thank you.
And I saw there's a couple folks on. It looks like I just did a little research on them running dispensaries or doing THC edibles or doing a cultivation of THC cannabis. Just so we're very clear, we do not invest in companies that are dispensaries, branded THC companies, or cultivators of THC cannabis. If you need a state license and you are at current, we are not going to be investing in your company. That's defined by our fund. We think there's some great opportunities there. We're not making investments in that space, but I will, just so we're clear, we are investing in CBD businesses, hemp and CBD businesses. So, brands, obviously from my slides, you can see we really like brands and teams who have done it before. we like very unique opportunities, IP driven opportunities in that CBD and hemp space.
Okay. Any other questions? I see there's another one regarding living expenses. Do most companies spend the $20K on rent/living expenses for relocation? It's really up to the companies. We provide the investments, hopefully for the companies to be able to build their teams, build their solutions, start getting into revenue generation, but it's up to them on how they spend those funds. We help them as best we can in identifying places to live that are hopefully as affordable as possible. Honestly, Boulder can get a little expensive, but we work with the teams to find the right living areas so that they can minimize on the costs for living here and education. We've got music coming in. Hello, if you can mute, whoever's providing the music, can you mute that?
Bob, if you scroll over that thing, you should be able to mute. There you go.
There we go, okay.
I just muted him. Okay.
Okay, that's nice music, but we need to continue on. Any other questions?
If there's not a question, I wanted to provide some more context on our timeline and deadlines for the accelerator. My advice to anyone on the call is to apply early. The more time we have to spend as a team researching, understanding your application, the business, and the team, the better. So often the early applicants have a higher probability of getting into the program. And what we're really looking for, if to give you some ideas, we're looking at teams, not individuals. If you're an individual, before you apply, I'd encourage you to find a co-founder. But teams that ideally have experience in the sector in which they plan to launch. So if it's a data company, they've been working in data businesses in the past. And ideally, it's early stage startup experience, not large corporate experience. That can still work, but working in a large company is very, very, very different than starting up a small business. Another thing that we look for is fundraising experience. Folks who have raised capital before on the team and not just worked at businesses that have raised capital, but they were involved in the fundraising process. Okay, we've got somebody in the background. I'm trying to find them to mute them.
Mitigate significant adverse environmental impacts to public health. So it's saying,
I'm not sure where that's coming from, Bob. You have any idea?
No, I'm looking for it myself. See if I can find it.
Take the environment precedent over anything else. It says there is going to be other things that they look at. This bill basically takes
so anyway,
reference to fostering development.
I can't seem to find who that person is. But anyway, I think that we are trying very hard to very disciplined about our investing and invest in companies that have previous teams who have a lot of previous experience in startups in the sectors and where they're investing.
So this is Mike Kruger. If I can ask a question regarding, can you guys hear me okay?
Yep, we just got, okay. Thanks, Matt, for muting the phone. Go ahead.
Yeah, so full-time, what is that, Monday through Friday, 8 to 5? What's the expectation there for full-time for the?
The full-time is Monday through Friday, and it typically starts at about 9 in the morning and will run typically to about 5 or 6. We will have some evening events where we have put together an event for the teams to meet with, again, mentors, or we hold job fairs so that teams can meet people that might be beneficial for them to join their teams. But typically it's Monday through Friday, kind of a 9 to 5 schedule, with some occasions where it goes longer.
Great,
and then
thank
we do also might have those ArcView events, which are, you know, travel events. So that's a matter of a plane ticket potentially and a hotel ticket. We have special rates through ArcView. Each of the team actually will get 2 free passes to ArcView during the program, but we also have special discounts for portfolio companies.
You know, what I'll add to that is that when we do events, we are very welcoming to our alumni who want to participate in those events. So when we go to Las Vegas every year and have a booth at their Marijuana Business Expo, our alumni are welcome to be part of our booth. If often, like I think this year we're buying another booth and making that available to the other companies, the alumni have to come through the program. They're paying a reduced rate to use that booth. If we have free passes to events, we distribute those. We're always looking for opportunities for our portfolio companies, because what's good for those companies and what drives them to be successful is good for us as investors, right? So it goes back to that. The question is, do we help? What do we offer the teams that after the program? We're constantly looking for opportunities to help those teams. So it's a long-term relationship.
Great, thanks, Patrick. We're just about out of time, so that's great that we were able to fit to the schedule. Any other questions that anybody has? If not, feel free to send me questions. My email is bob@canopyboulder.com. Feel free to send me questions, or if you need additional information, feel free to reach out to me. And we've done one video actually on the program. We're going to be doing more of those kind of YouTube videos to talk more about kind of what we covered today. So we'll be sending out more information about the program as we move through the next few weeks. Patrick, any final comments?
You know, I just saw that question that came in. Do single founders have a 0% chance of being accepted? The answer is pretty close. A solo founder, the probability of success for a solo founder, a single founder in an early stage business, is very low. And the reason is that there's just so much to be done. And there's no one person that has all the skill sets required to successfully launch a business. And we're not interested in businesses that will grow slow. We want businesses to invest in teams and businesses who want to move fast, right? That recognize they can't do it themselves, and they recognize and have the experience that compels them to bring in other people to the business, to increase the chances of success, to have people to collaborate with and to commiserate with, and someone to keep them tempered and their confidence tempered when things are really great, and keep them focused, and then people to help pick them up when they're in their lowest of lows as entrepreneurs. And it's a roller coaster. So, entrepreneurship, even with a team, can feel like a very lonely journey at times. There's nothing better than having people with you along that ride. And we want to be part of that, right? We want to be the sort of, if you have two founders, we want to be play that role of the third founder that is there to give you good advice, good counsel, provide feedback, brainstorm through problems and opportunities together to increase the chances of success for the business. So we want to be on the team. And that's why we're very selective about who we choose. And, we want to have an impact, near term and long term, not only just for the companies, but for the industry as a whole. And that's sort of something I'd like to wrap up with, is why we do what we do at CanopyBoulder. We do this because we see business as the greatest agent of social change, the greatest driver of social change in our world. And there are many, 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 many examples where business is driving a new conversation and driving change in our society, positive change. So when we started CanopyBoulder, we knew this was a industry full of startups. Now, some of them may have $10, some of them may have $1 billion, but they're all startups. And you just can't find great success on your own. You need to have good investors who share with you your dreams and your drive and want to help. You need to have teammates, people that share that vision and drive and then want to help. And that's what we want to do. We want to help the industry grow more profitably, more sustainably, in a very positive direction. Because if we do that together, we're going to change the world. And that is the greatest sort of achievement I think that we can all achieve, and then the greatest legacy we can leave behind.
Great. Okay then, well, let's, thank you, Patrick. Let's go ahead and we'll close out the session. Again, if you have any questions or need any additional information, please reach out to me at bob@canopyboulder.com. And if you believe you're a good fit with the program, we recommend that you go to the canopyboulder.com site and submit an application. And we will review that and get back to you very quickly. So thank you very much, everyone. I hope you have a great weekend, and I look forward to hopefully meeting and speaking with you all. Thanks again.
Thank you.
Thank you.